When you get on a plane, you're probably thinking about the airline, right? Or maybe the company that built it, like Boeing or Airbus. But what about the company that makes the really critical parts inside the jet engines, or the advanced fasteners that are literally holding the whole thing together? Well, that's Howmet Aerospace. They're kind of the powerhouse behind the scenes. And wow, did they just have a quarter to talk about. Here's a little secret about the industry. If you want to know how healthy global travel really is, don't just look at ticket sales. You got to look at the companies supplying the very bones of the machines. And as we're about to see, Howmet's latest performance, well, it tells a story of an industry that is absolutely flying high. Okay, let's just rip the Band-Aid off and get to the good stuff. First up, revenue. For the third quarter of 2025, Howmet saw a 14% jump year over year. Not bad, right? A very solid start. But revenue? That's only part of the story. Take a look at this. A 26% increase in adjusted EBITDA. Now, that tells us they aren't just selling more stuff. They're getting way more profitable and efficient while doing it. That's the key. And here is the real kicker. Adjusted earnings per share, it shot up by a massive 34%. So the takeaway here is pretty clear. This wasn't just a good quarter for Howmet. Nope, it was a phenomenal one. So let's dive in and really unpack what a record-breaking quarter like this actually looks like. We've seen those big, flashy headline numbers, but what's the story behind them? And hey, you don't have to take my word for it. The company's own CEO, John Plant, basically said, "We nailed it." They didn't just meet their goals, they completely blew past them, doing better than even their own most optimistic predictions. Now let's talk about a really important metric for a company's health: free cash flow. Howmet generated $423 million of it this quarter alone. I mean, that is a huge pile of cash they can now use to reinvest, pay off debt, or give back to investors. It's a sign of a really strong business. So, what's the secret sauce? What's fueling this incredible performance? Well, the answer, for the most part, is up in the sky. There's this massive post-pandemic boom in the aerospace market, and that's the primary engine driving Howmet's success right now. And this chart, it just says it all, doesn't it? Take a look. Commercial and defense aerospace together make up 70%, 70, of Howmet's total revenue. It's really simple. When people are flying, Howmet is thriving. Okay, so let's break this down even further. Let's look at the specific divisions inside the company, the individual gears in the Howmet machine, if you will, that are really cashing in on this aerospace surge. All right, first up is their biggest segment, engine products. This division alone pulled in $1.1 billion. That's a 17% jump from last year. And can we just talk about that profitability margin for a second? 33.3%. That is just a monster of a margin. This division is an absolute powerhouse. So why the huge surge? Well, it's basically a perfect storm of demand. You've got more planes in the air, which means you need more new engines, and this is really important, more of those super high margin spare parts. Then you add in strong defense spending and a booming energy sector, and yeah, you can see why they're hiring hundreds of new people just to try and keep up. Next up, fastening systems. We're talking about the critical nuts, bolts, and all the specialized little pieces that hold an entire aircraft together. Revenue's up a strong 14%. But the number you really need to see here is that adjusted EBITDA margin. It jumped by 480 basis points. That's a massive, massive leap in how profitable this division is. So how'd they do it? Well, this division's success is really a story of two things. First, they're riding that huge wave of commercial aerospace demand. And second, they've gotten incredibly efficient internally. So they just got much better at what they do, which drove profits way up, even while a tiny part of their business in trucking saw a bit of a decline. And rounding out their big aerospace-focused divisions, we have engineered structures. Revenue grew a solid 14%, but just look at the adjusted EBITDA. It was up an incredible 53% from last year. I mean, wow. This division, which makes crucial parts for the airframe itself, is just absolutely on fire. The story here is pretty simple, but it's powerful. This division makes parts for both military and civilian aircraft. And with both of those markets firing on all cylinders right now, the demand for their essential structural parts has just gone through the roof. Okay, so it all sounds amazing, right? But not every part of Howmet's business is flying quite so high. Now we're going to pivot from the skies to the ground, where one of their other key divisions is actually facing some pretty serious headwinds. This slide just lays it out so clearly. On one side, you've got the aerospace markets posting huge double-digit growth, soaring. On the other side, you've got commercial transportation, think heavy-duty trucks, and that market is slowing right down. It really is a tale of two completely different economic realities. And here's what that slowdown looks like in real numbers. The sales volume for Howmet's forged wheels segment, they make aluminum wheels for big rigs, it dropped by a pretty dramatic 16%. Now, this is one of those cases where you have to look past the headline number. The top-line revenue was basically flat, but the reality is that actual demand fell hard. Revenue only looked okay because the price of aluminum went up and they passed that cost on. But here's the really impressive part. Even with that big drop in volume, they managed to stay profitable by being super aggressive with cutting costs. So we've got this mixed picture, right? Soaring aerospace divisions and a grounded transport segment. So what does the future hold? What does the company's flight plan for the next year or so look like? Well, the company is clearly feeling pretty confident. They've raised their full-year guidance for 2025 across the board. Revenue, EBITDA, free cash flow, all of it. And they're already forecasting another big step up for 2026, targeting around $9 billion in revenue. That's another 10% jump from here. You know, it really all boils down to this. Howmet's incredible success is fundamentally tied to our global demand for air travel and defense. And with aircraft orders backlogged for years and years to come, it leaves you with a really interesting question. In a world that just keeps wanting to fly, is there really any ceiling for a company like this?